Okay, so we have a pretty big filing to talk about out of the Fed Register regarding the reporting of short sale information, trade data. It's pretty big. Now, this one was filed by CAT NMS, the consolidated audit trail. Basically, it's going to be tracking the life cycle of an order. So, in order to do this more effectively, they want to be able to tell what's going on with short sale data. So, let's go over the introduction real quick. Now, a short sale involves the security or a sale of a security that the seller does not own, or a sale that is consummated by the delivery of a security borrowed by or for the account of the seller. Short selling has long been used in financial markets as a means to profit from an expected downward price movement, to provide liquidity in response to unanticipated demand, or to hedge the risk of a long position in the same security or a related security. Short selling has also been shown to improve pricing efficiency by providing information to the market. While short selling can serve useful market purposes, it may also be used to drive down the price of a security, to accelerate a declining market in a security, or to manipulate stock prices. Now we have a few super notes here. So, super note 3 says market liquidity is generally provided through short selling by market professionals, such as market makers who offset temporary imbalances in the buying and selling interest for securities. Short sales affected in the market add to the selling interest of stock available to purchasers and reduce the risk that the price paid by investors is artificially high because of a temporary contraction of selling interest. Short sellers covering their sales also may add to the buying interest of stock available to sellers. And then it refers you to a filing. Supernote 5 it refers you to another, a book or a cited work off of Phil McIntosh from NASDAQ, October 1st, 2020. Their website's available there if you want to look at that. I'll link it in the description. It says that efficient markets require that prices fully reflect all buy and sell interest. Market participants who believe a stock is overvalued may engage in a short sale in an attempt to profit from the perceived divergence of prices from true economic values. Such short sellers add to stock pricing efficiency because their transactions inform the market of their evaluation of future stock price performance. This calculation or this evaluation is reflected in the resulting market price of the security. Then it refers you to another ruling. So moving on, the Commission has plenary authority under Section 10A of the Exchange Act to regulate short sales of securities registered on a national securities exchange as necessary or appropriate in the public interest or for the protection of investors. Currently, regulatory requirements applicable to short sales of equity securities are generally found in Regulation Show, which became effective on January 3rd, 2005. Now, Regulation Show imposes 4 general requirements with respect to short sales of equity securities. Number 1, it requires broker-dealers to properly mark sale orders as long, short, or short exempt before effecting a short sale. Number 2, it requires to locate a source of shares that the seller reasonably believes can be timely delivered, commonly referred to as the locate requirement. 3, to close out failures to deliver that result from long or short sales. And then it refers you to CFR 242.204, which is the closeout requirement rule in the Code of Federal Regulations, which says a participant of a registered clearing agency must deliver securities to a registered clearing agency for clearance and settlement on a long or short sale in any equity security by settlement date, or if a participant of a registered clearing agency has a failed to deliver position at a registered clearing agency in any equity security for a long or short sale transaction in that security, the participant shall, by no later than the beginning of regular trading hours on the settlement day following the settlement date, immediately close out its fail to deliver position by borrowing or purchasing securities of like kind and quantity. So, as you can see right here, anyone pushing FTD hype clearly hasn't read the rules. And also, the T21 cycle that everyone was talking about last year does not exist. So, there's that. Moving on. Regulation Show also imposes a short sale price test circuit breaker, also known as the short sale rule. Now, the proposed rules related to this. So we have proposed Rule 13F-2, which is designed to provide greater transparency through the publication of certain short sale related data to investors and other market participants by requiring certain institutional investment managers to report to the commission on a monthly basis. I think it should be daily, man, but whatever. Certain short position data and short activity data for certain equity securities. Why not all equity securities? Anyways, more information about the short sale activity and short positions of institutional investment managers may promote greater risk management among market participants and may facilitate capital formation to the extent that greater transparency bolsters confidence in the markets. Now, Supernote 15 here, as defined in Section 13F6A of the Exchange Act and for purposes of proposed Rule 13F-2 that we just talked about, institutional investment manager, the definition, includes any person other than a natural person investing in or buying and selling securities for its own account, and any person exercising investment discretion with respect to the account of any other person. As such, the term institutional investment manager typically can include investment advisors, banks, insurance companies, broker-dealers, pension funds, and corporations. Now we have proposed Rule 205, which would establish a new buy-to-cover order marking requirement for certain purchase orders affected by a broker-dealer for its own account or for the account of another person at the broker-dealer. The proposal to amend CAT would require CAT reporting firms to report short sale data not currently required that would enhance regulators' understanding of the life cycle of a trade from order origination, including an order's mark, through order execution and allocation. Now, proposed Rule 205 and the proposal to amend CAT are intended to supplement the short sale data made available to the Commission in proposed Form Show filings by requiring the reporting to CAT. Now, the required reporting to CAT is going to be two primary things, and this is where it gets interesting, because number one is the buy to cover that we just talked about, which is going to basically, whenever they cover their positions, it's going to mark it, so you'll know. And then two, reliance on the bona fide market making exception in Regulation Show, which y'all know what that is. It's legal naked shorting. Bona fide market making equals legal naked shorting. So that's basically the gist of it. That's what they're going to be doing. I'll go through the rest of the filing, see if there's anything relevant, but that's basically it. So there's that. Buy to cover and reliance on the bona fide market making, naked shorting. So let's see what happens with this. And by the way, in addition, proposed Rule 205 and the proposal to amend CAT would enhance the information regularly available to the Commission and other regulators that could be used to oversee short selling and to reconstruct significant market events. Reconstruct significant market events. Wonder what this is foreshadowing. Now, in turn, the Commission's more accurate and timely reconstruction response to market events could contribute to overall investor protections, particularly in times of increased market volatility. So there you go. That's it, basically. Big changes coming up soon. GME and AMC, we always know, thanks to Ryan Cohen, 2023. But if you're interested, we got about 15 spots left if you want to capture what's coming in the near term, or if you want to learn. Either way, up to you. Very few spots left, and very excited for the next upcoming weeks. FOMC meetings tomorrow, don't forget.